Chapter 10, Inventory. In this chapter, you'll learn how QuickBooks handles inventory. You can use QuickBooks to track items that you keep in inventory and sell to your customers. If your business purchases or makes items for resale, keeps them in inventory, and then sells them, QuickBooks can track quantities on hand and the value of the inventory after every purchase and sale. In this chapter, you'll learn how to enable and set up inventory, order and receive inventory using purchase orders, sell and adjust inventory, and create inventory reports. There are several reasons to track inventory in QuickBooks. First, when you use purchase orders to buy inventory parts, QuickBooks updates your inventory so you know which items are on order and when they're due to be received. You can easily keep track of the cost to you of the items you've sold in the cost of goods sold account. You can also keep track of the income you receive from the sale of inventory parts. You also know all of your current quantities on hand. Note, inventory is only available in the QuickBooks Online Plus version. Before setting up inventory, let's note a couple of things about how QuickBooks handles inventory. First, it uses the first in, first out method to cost the inventory. As the name implies, QuickBooks Online will always consider the first units purchased, or first in, to be the first unit sold, or first out. QuickBooks will adjust your assets and cost of goods sold account accordingly whenever sales of inventory items are entered. Inventory Setup. To use inventory, you must enable the feature in QuickBooks Online Plus. To enable it, click the gear icon, and then click Account and Settings. Click Sales. Click Products and Services. In this section, select Track Inventory and Quantity on Hand. The Show Product Service columns on sales forms is enabled by default. It is the column you choose on the sales form to add a product or service to an invoice. Select Show SKU column if you want to display the SKU number on forms. This feature adds a SKU column to on-screen sales forms so you can easily track products and services by the stock keeping unit. You can also show SKUs on printed forms. The Track Quantity and Price/Rate field is enabled by default and adds the fields to the sales form. Setting up inventory parts. You can set up inventory from the Products and Services list. Click the gear icon, and then click Products and Services. Click New. Choose from one of the four options. In this example, we're setting up inventory, so click Inventory. There are three pieces of key information to add to this window. You have to enter sales information, purchase information, and inventory tracking information. Start by entering the name of the item. If you'd like to track the item's SKU or stock keeping unit, you can enter it in the appropriate field. If you'd like to keep a picture next to the name of the item, you can upload an image for each inventory part. Next, choose the category, if necessary. Click the drop-down arrow and select it from the list. This is an optional field and will most likely not be used in this class. In the Initial Quantity on Hand field, enter how many of this item you currently have. If you don't have any yet, enter 0. This will most likely be the case in this class. In the As Of date, enter the date that you want QuickBooks to start tracking this item's quantity on hand. This is an important field as you can only use items entered that come after this date. In the reorder point, enter the minimum quantity you want to have on hand. This will remind you to reorder more products at this minimum threshold. Next, you'll enter the inventory information. Click the Inventory Asset Account drop-down arrow and select an account to track the inventory. QuickBooks chooses the default inventory asset account, but you can choose an account of your choosing if you wish. For this example, leave it as is. Next, enter the description that you want customers to see on sales forms. Next, if you charge sales tax when you sell this item, select Is Taxable. This means that every time this item is sold, QuickBooks will add sales tax to the sales form. This helps automate the sales tracking in QuickBooks. Enter the description and purchasing information that appears on purchase forms, like purchase orders and bills when you receive or order this item. Next, enter the cost of the item. If necessary, click the Expense Account dropdown and select a Cost of Goods Sold account. QuickBooks will add the cost of goods sold by default, and it's recommended that you use this account. If you need to add more inventory items, click the drop-down arrow and click Save and New. Otherwise, click Save and Close. Setting up bundles. A bundle is simply a way of grouping products and services that you often sell together. Bundles save time when you create sales transactions. Instead of entering each product or service as a separate line item, you just enter the bundle itself, and QuickBooks automatically adds the bundled items to the transaction for you. For example, you sell a gift basket that contains a bag of candy, seasonal fruit, and a bottle of wine. You usually add the candy, fruit, wine, and the basket as separate line items on sales. Instead, save time by creating a bundle called Gift Basket that includes all 4 items. When you're ready to record a sale, just add the bundle to the sales form, and QuickBooks adds the 4 bundled items to the form automatically. To create a bundle, from the Products and Services list, click New. Then click Bundle. Enter the name for the bundle. Now enter the description that customers see on sales forms. Next, if you want to show your customers the individual items that the bundle contains, select Display Bundle Components when printing or sending transactions. Otherwise, your customers see the name of the bundle but not the items included within. Now, choose the products and services you want to include in the bundle. Then, enter the quantity for each product or service as needed. After entering the necessary items and the quantities, click to save the bundle. Purchase orders. A purchase order, or PO, is a document that you can send to a supplier. It states your intent to purchase products or services from them and defines the details of the purchase, such as quantities and price. If the supplier accepts your PO, it means that you have an agreement with them to receive those products or services under the terms given. It's a good idea to use purchase orders to receive and enter inventory parts. Enabling purchase orders is available in QuickBooks Online Plus. To enable a purchase order, click the gear icon and then click Account and Settings. Click Expenses. Click to edit the purchase order section. Select the Use Purchase Orders box. You can enter up to 3 custom fields if you wish on the purchase order. Enter the custom fields here if necessary. You can enter a default message to suppliers on purchase orders as well. This is an optional field. After turning on the feature, click Save at the bottom of the page and then click Done to enable POs. Creating purchase orders. To create a PO, click the Create menu and then click Purchase Order. First, choose a supplier to order the products from. Next, if you're shipping a product directly to a customer instead of to yourself, In the Ship To drop-down, choose the customer. Next, in the Item Details section under the Product Service section of the purchase order, enter the inventory items you're going to purchase. Next, enter the quantities that will be ordered on this PO. In most examples, you will not use the Account Details section on a purchase order. Specifically, when ordering inventory parts, you must use the item details, as this will let you enter a quantity on hand and receive that quantity into your inventory after creating the purchase order. Finally, click to save the transaction. An important note about purchase orders is that they are non-posting transactions. This means that until you receive against a purchase order on a purchase transaction like a check or bill, the PO will not post to your general ledger. This means that your students can enter as many purchase orders as they'd like without having any effect on the accounting until they are received against. Basic purchase order reports. You can find information about purchase orders, including open purchase orders and the details on POs, under the Reports menu. Click Reports, and then click Review Expenses and Purchases. Click to open the Purchase Order Detail Report. Review this report for more information about individual purchase orders. You can also view open purchase orders on the Suppliers page. Click Suppliers, and then from the Money bar, click Purchase Orders. QuickBooks will display all of the purchase orders. Receiving against purchase orders. After a supplier has fulfilled the product or service from your purchase order, you'll need to record a bill, check, or expense from the supplier to receive against the purchase order. Let's look at an example. Click the Create menu, and then click Bill. Enter the name of a supplier who has an outstanding purchase order. After entering the name and clicking Tab, QuickBooks slides open a reminder of open POs on the right side of the window. This will give you a list of all open purchase orders for this supplier. Click Add on any of the purchase order items displayed on the right side of the window. This will add the information from the PO directly to the bill. It assumes that you're going to receive the items in full. However, if you update the amount received, QuickBooks will enter that amount into the quantity on hand and leave the remaining amount outstanding. If you receive a purchase order in full, QuickBooks will automatically change the status to closed. This prevents any purchase orders from appearing on the next transaction after you've received the items in full. Click to save and close the transaction. You can receive against a purchase order multiple times. Let's take a look at this example. Click the Create menu and then click Bill again. Choose a supplier with an open purchase order. Click Add on the purchase order displayed on the right side of the window. Now enter the quantity received. This number will be different from the total amount on the purchase order. Now click to save the transaction. Any unreceived items will be outstanding on the purchase order, and they can be received against on the next bill. Now return to the Bill window, enter the name of the supplier, click Tab, and now you'll see the PO displays again on the right side of the window. However, in this example, only the remaining items can be received. Click Add and complete the bill as needed. Selling inventory. You'll sell inventory just like any other service you sell. You'll add inventory items for sale to invoices and sales receipts. When you sell inventory items, QuickBooks makes accounting entries to account for the cost of the item to the cost of goods sold and to decrease the quantity on hand and affect the inventory asset account. Let's take a look at this example. Click the Create menu and then click Invoice. Complete the invoice form like any other form. Choose the inventory items for sale. Click Save. Now let's look at the journal entry behind the scenes. Go back to the invoice and then click the More link at the bottom of the invoice. Now click Transaction Journal. QuickBooks displays the journal entry behind the scenes, and you can see that the inventory asset and cost of goods sold as well as the sales accounts are all being affected accurately. You can also look at the products and services list, and you'll find the quantity on hand has been adjusted for each purchase and sale you make of the inventory part. Inventory Reports. QuickBooks includes a Manage Inventory section in the Report Center. From the navigation bar, click Reports, and then click All Reports. Click Manage Inventory. There are several key reports. First is the Inventory Valuation Summary. This report summarizes the value of your inventory. For each inventory item, the report shows the item name, the SKU, quantity on hand, asset value, and calculated cost. The Inventory Valuation Detail Report gives you a list of transactions that affect the value of the inventory during a particular period. If you're looking for specific transactions related to inventory parts, this is the correct report to use. The Physical Inventory Worksheet helps you track inventory and do a physical count at the end of the year or other period. This report shows the name, description, quantity on hand, reorder point, and physical count of each item in your inventory. The physical count column contains blank lines where you can write in the actual quantities as you make a physical count of your inventory. Adjusting inventory. Sometimes you might discover that you have either more or fewer of an inventory part than QuickBooks shows. If this happens, you can easily adjust the item's quantity in QuickBooks to match what you have in stock. To adjust inventory items, do the following. Click the Create menu and then click Inventory Quantity Adjustment. Enter the date for the adjustment. QuickBooks automatically chooses the Inventory Shrinkage account. If necessary, you can change this account by clicking the drop-down menu and selecting the account of your choice. Now, add the inventory parts you want to adjust. In the first row in the table, click the Product field and then select the inventory part. Now, enter the new quantity. This means the difference of the quantity that you have on hand and what you now have on hand after the loss or gain of inventory parts. QuickBooks will now give you a difference in the right-hand side. Repeat this process for each inventory part that you want to adjust. After entering all of the adjustments, click to save the transaction, and QuickBooks will adjust your quantity on hand and change the value of your inventory asset and affect the inventory shrinkage account to account for the expense of this inventory adjustment.